Hi, Dovi. How are you?
Yeah, I'm great. Yeah, thanks for asking.
I'm so happy that you're a part of the FinTech Week, and I've been following all you do, of course, Group 11 and all your amazing companies, and we're going to mention them. But before we dive into that, I'd like the audience, the audiences to know about you, about who you are, even before Group 11.
All right. So, just a minute presentation, if you will. I'm the general partner of Group 11. I'm a sole GP. I'm Israeli originally. I left Israel about 15 years ago, immigrated to the States, where I pursued my master's degree at UC Anderson, following by working for a few years in the financial services industry. I worked for Deutsche Bank as a wealth manager, one of 20 bankers that were fortunate enough to join, that were fortunate enough to cover the Americas at a time where the financial crisis has begun. I joined in June of '08, just before the crisis. I then ran a family office for a large family where I was in charge of all of their investments. During that time, I also built a mortgage company and a life insurance company. I, you know, I guess I'm kind of known for breaking the Guinness World Record and selling the world's largest life insurance policy, but that's besides the point. And lastly, over the past 8 years, after leaving the family office, I went on my own to start a VC shop that focuses on financial technology. I am a passionate financial technology investor. I've been doing this even before the term fintech was coined, right? So started with my first fintech deal, which was December of 2011. I've been very fortunate to build a name for myself and for my firm of, I guess, an astute, fair, value-add investor, fintech investor, and yeah, and I've been extremely fortunate to back some of I guess the most amazing entrepreneurs out there that are working on category defining, on building category defining companies that are turning global in recent years.
Amazing. So yes, fintech is our topic. We just had a FinTech Nation Summit, fintechs from all over the world. Now we're doing a FinTech Week. You're the right person to talk to, and please let's start. I want to start with some of the companies that you're investing in, and you know them from early stages in the US. Let's just throw some names, and we'll take it from there. Of course, I know personally Lily, right?
Mm-hmm. Yeah. So let me take a step back and I'll say that, when I said the thesis of the fund, the idea was to invest in what we consider to be category defining companies that are targeting certain subsectors of financial technology. So it can be, lending, and under lending, you can have peer-to-peer lending, you can have point of sale financing, you can have residential mortgages, commercial mortgages, etc. Right? It can be financial reporting. So you can have, wealth management reporting software companies like Adapar that offer that type of reporting to RIAs and family offices, and you can have companies like OpenGov that offer the same type of reporting to municipalities. You can have other categories of financial technology like wealth tech, like neobanks, and of course accounts payables, accounts receivable, invoice automation, and the list goes on and on. So the idea was to build subject matter expertise in various verticals of financial technology and to make investments in those verticals, which is what we have done. We've been very fortunate to be an early backer of Tipalti.
So we have on the summit, and we are very happy. And Chen also is speaking.
Yeah, Chen is great. So I've been on Tipalti's board for, I think, since 2016, since I led their Series A. We've been very fortunate to back Papaya Global, which is an HRIS software company. I didn't say, but Tipalti is an accounts payable software solution, right? And I think today we can agree that it's a global leader in that respective category.
Definitely. I think when you go through, let's say, GoDaddy or Twitch or Twitter, basically it's Tipalti on the back end, right?
Yeah, Tipalti's customers do include, what I'm allowed to say publicly, they definitely do include the Amazon Twitch and Twitter, amongst thousands of others.
Wow.
And yeah, so we started with Tipalti, but also Papaya Global, which is a PEO service provider, global payroll service provider software. a software solution automating these mundane processes. Sunbit, which is a physical point of sale financing solution, which is where I'm the first investor and led the seed, participated heavily and meaningfully ever since, and on the board of the company. Trip Actions, which streamlines and automates corporate travel, but also now we're adding this component of expense management. We call it T&E for a reason, right? So travel and expense. Lily Bank, where I'm the first investor, led the seed, led the A recently, digital bank for freelancers. Next Insurance, which is an SMB insurance software provider. Who else? I don't know. It's a long list, and I always get upset. I always get concerned that I won't mention all of these companies, but yeah, it's a pretty elaborate.
I can stop you here and say that, of course, during COVID, these companies are wow. I mean, you know, COVID is a very sad thing for everybody, but these companies are doing amazing. The companies that you mentioned, right? All of them, I think.
You know, in our industry, we all tout our successes. Nobody talks about failures, but so because actually, I'm opening here an interesting point for discussion, you know, in the future if you want to. But you know, it's because there are no measurements of transparency in the VC industry, right? So everybody can talk a big game, and everybody can claim they're a great investor. I try to be kind of like to offer a little bit of a different perspective or type of behavior. Maybe we're going to turn our performance numbers, so that's total value to paid in capital, distribution to paid in capital, internal rate of return, right? Those three measurements that are very important. We're going to turn them public. So I just made them public because I just interviewed the Globes magazine in Hebrew and in English, and I've given those numbers. But from now on, it will take a few days to develop and add to our website. But from now on, our performance metrics will be updated on a quarterly basis into our website. And I think that way we can all be held accountable to our performance. And I think that we will see more and more of that in the industry, where VCs will basically share their performance, and wow. It might become even mandatory at some point. And I don't see a reason why it won't be, because there's so many managers out there. Some of us are good salespeople, some of us are not as good, and I think it's fair to try to create some kind of common behavior in the industry that promotes transparency. Anyways, but yeah.
I wanted to ask, like, what excites you, the person who has years of experience in finance and fintech? Because for me, it's all these companies are like walking in a candy store. Like I love these fintechs. So I'm like curious about what excites you in the future of fintech and the possibilities that we have now.
Yeah, you know, let me take a step back, because I kind of consider myself an economist. So I love to kind of like research trends, and I like to think top down instead of bottom up. Obviously, you can be very opportunistic and still find great deals, right? But part of my thesis is to kind of like, you know, we have the boxes that we need to check when a deal comes in, but why are we seeing the trends that we're seeing in the market right now, and what is the future like in the next 10 years, right? And you know, Nir, my goal is not just to be a great investor. My goal is not just to deliver great, you know, top decile performing performance to my limited partners. My goal is to be the best financial technology investor out there. So I want to start with that, and I think it behooves me to look at things as a macroeconomist, like just from above, and then try to create a derivative to the analysis that we perform, and then from there, you know, try to find the right investments to target. I've written a lot about some of the things that we're seeing in the market right now. If you go to my Medium feed, you can read it under the most interesting pieces, I think, are unicorns versus alicorns, bubble. So real versus fake disruption. I think this is a really cool piece talking about the trends we're seeing right now with having more than 500 unicorns out there. 300 of which were added in the last 2.5 years, which I think is insane. So we're talking about that phenomena, and we're asking what makes a company a real disruptor. The other one is called Equities Gone Wild, Bubbles Are Beginning, and I'm talking about what we're seeing right now in the overall market. The bottom line is, I guess I'm trying to. These are long articles. Each of them is 11 minutes read, 11 pages. But if I try to condense it into trends that I'm seeing in the market, is this top down, right?
Yeah.
And a couple of them have nothing to do with fintech. Fintech is the outcome of those trends. It's not the reason behind those trends. Well, first off is no GDP growth in economies that are used to having like 3, 4, 5% GDP growth, like the Americas. And we can blame COVID, but also we can blame, more importantly, we can blame birth rates. Birth rates, if you look at Japan in the mid 80s, and you look at their stock market until this very day, and you look at their birth rate, you can see the connection between the two. Birth rate drives consumption, drives GDP, right? Production, consumption, GDP. And our birth rate is below replacement. Replacement is 2.1 kids per couple. So I think that's one thing that we're definitely seeing today. And of course, couple it with GDP that is growing super slowly, couple it with interest rates that are at all-time low, which of course, when you calculate on the net asset net asset values, when you do discounted cash flows, it might explain some high valuations we're seeing out there. And lastly, consumption is lower than ever before. And I think when you couple all of them together, which was further amplified by the COVID-19 crisis, what you're seeing is many companies, middle market companies, large companies, are looking at their revenue lines, they're looking at the expense line, and they start thinking about ways to cut expenses and streamline operations and remove inefficiencies in a way to increase margins. Because on the revenue line, there is a limit to how much they can grow the revenue in a market that stopped growing. And there, the derivative of that, of course, is what we're seeing in the market: adoption of enterprise software financial technology tools by SMBs, middle market organizations, and of course large organizations, enterprises. So that's high level for a second, right? So that's high level from an enterprise software perspective, so B2B. If you want to talk about business to consumer applications, I think what we're seeing is this. We're seeing what I call the perfect fintech storm that stems basically from three phenomena that have converged together to create this perfect fintech storm. The first one is that established financial institutions that for a long time I've been saying that they're kind of like zombies, they're dead men walking. Banks, large insurance companies, etc., have lost their power and influence on Capitol Hill, and of course you can see that reflected in the price per share of Deutsche Bank when I was an employee.
Yeah, definitely.
It's 10th of what it was. You can look at Wells Fargo, you can look at Bank of America, you can look at JP Morgan, and all of these guys. And many of them are still on the defense versus the offense, which kind of like happened after the financial crisis with Dodd-Frank Act and Basel II, Basel III, Volcker rules, and the list goes on and on. Banks were unbundled, right? And number one, and number two, promoted the compliance officers instead of creating digital initiatives that weakened their power, their lobbyist power on Capitol Hill, paved the way to what I think is the fintech renaissance we're experiencing today from the consumer's perspective, where you have financial licenses that are now granted to fintech startups, including banking licenses. We're seeing that in Brazil. We're seeing that definitely in Europe with BaFin granting licenses, and we're now seeing it in the Americas, right? We're seeing fintech pursuing banking licenses, but also being granted banking licenses, which is totally unheard of, right? The other type of licenses we've seen were earlier on. There was the Card Act in 2009 that have paved the way to online lending, right? To the emergence of companies like SoFi and Lending Club and what have you. So weakening of financial institutions, the opening up of regulatory hurdles, I think it's something that is happening right now and it's being intensified. That's first cause. Second one is technological advancements. So obviously, if you look, 10 years ago versus where we are today, this device is 100 times faster, has memory that is better by 1,000 times. Penetration rate in the Americas is well above 86%. Penetration globally is well above 70%. And of course, in some emerging countries, you can buy a smart device for $30. So this powerful computer that is far more powerful than the computer that sent the Apollo mission to the moon in 1969 allows us to do many things, including our taking care of our banking needs, insurance needs, and what have you, right? So I think that's the second thing. And of course, thirdly is the generational shift. Millennials and Generation Z are now 50% of the market in terms of the workforce. They are going to be 75% by the end of 2023. This is a digital, they call them digital nomads, right? They're a digital generation. They were born with a smart device in their hands. And that allows them, what do you mean allows them? That's what they need. They need to consume things through the mobile device. They seek immediacy. And of course, they're extremely demanding when it comes to financial instruments. So it can be a neobank, it can be their life insurance policy, it can be paying at the point of sale, and the trading the brokerage through eToro or Robinhood or what have you. Everything is and will be done through the mobile device. So put all of those three factors together and you're seeing the type of forces that have converged to create the fintech renaissance we're seeing today in business to consumer. So I gave you kind of like how I see things from the consumer perspective, how I see it from the enterprise perspective. Of course, I invest predominantly in business. If I look today, predominantly business to business facing companies, but I've done recently some business to consumer facing companies like, for example, Lily Bank. I've also done business to professional facing companies like, for example, Equity B that I'm very excited about, definitely growing really nicely as well. Yeah, I'll stop here. Was that good enough? I tried to give you.
Yeah, no, it's amazing because I don't get to hear this perspective of yours, and now I understand your philosophy in that, and also your focus in Group 11 and what you're doing. We are a fintech week. We have a lot of these amazing Israeli companies that you mentioned, and now due to the peace and everything that's going on with the UAE. I'm seeing that the first delegations who are flying both ways are the banks and the fintechs creating these fintech bridges. You're sitting in the US right now, right? What are you seeing from there? How do you see things from over there? Because you see your colleagues and people that are flying, and what is the opportunity?
You mean in the UAE?
Yeah, the UAE, the Dubai, Abu Dhabi.
Yeah, I'm honestly not that familiar with that region. I assume that, I consider myself, as I said, I think the US, if you want to see how fintech will look like in the UAE, you go to the US, right? Or in South America, Latin America, I mean, you'll go to the Americas. Everything that is happening in the Americas is typically ahead of the curve than other territories, and I think that remains the case. I think from my perspective, I guess I'm kind of like in a unique position. I sit in the Americas, my investors are Americans, I consider myself an American. But 65% of our portfolio has Israeli connection. So many of our companies have their R&D centers in Israel, but they develop their markets in the Americas, right? Equity B, Sunbeat, Lily Bank, Papaya Global, Tipalti, Next Insurance, if I haven't mentioned them. So they're all based in Israel and in the Americas, management in the Americas, business development technology in Israel. So I kind of like, I can comment on the Israeli market. I can comment on the US market. I cannot comment on what's happening in other territories in the Middle East, nor do I really care. In the
Exactly.
grand scheme of things, and no disrespect to
Yeah.
our partners in the UAE, I'm not going to invest the fund's capital in the UAE. I'm not familiar with the space yet. I'm not comfortable with it yet. I think that the market is in the Americas. Just look at the total addressable market. I have to be in the Americas. Having said that, our companies are turning into global companies. They will service customers all over the world, including the UAE and what have you. I think it makes perfect sense, of course, for our financial institutions in Israel and financial institutions in the UAE to meet one another and transact with one another. I'm just not part of the this particular.
Exactly, and no, that's why we have you on the summit, because we are also a global summit, and I'm very happy because we could have interviewed all these amazing companies, and we have you, and you're telling us, and you invested in these companies. Of course, it's a statement. Of course, you saw something, and you're seeing a lot of things into the future for each one of the companies that you mentioned, and probably others. And again, I'm interviewing Tipalti over here, and I'm hearing so much of the good news about them, and so exciting, and so many things are coming up, and not just them.
Yeah, I think. Listen, I'll just say this: every relationship takes time to build. I think that's an important thing to remember, and I think that we're all originally Middle Easterns, right? Our friends at the UAE and us in Israel, so culturally we're very similar, but I don't know how they conduct business in the UAE. I don't think that the many fellows in the UAE know how we conduct business in Israel, and I think that it will take some time to dance the dance and figure out, what's the best constellation for some joint victories, let's say. Yeah. So that's all I can say about.
Yeah, I'm sure that sometimes you're translating Israelis to American, right? In terms of the culture and the business, and
I try. I think Israeli founders are great people to give money to, right? I've given hundreds of millions of dollars to Israeli founders. I've invested hundreds of millions of dollars in Israeli founders. I was never, quote unquote, screwed, right? I've been very, very fortunate to invest in people who were honest, hardworking, have like insane aspirations, and and of course, consequently, our performance has been pretty good. But I haven't invested in other asset classes. So I think when you look at the piece that is being formed between Israel and UAE, I think technology is like probably the easiest one for both countries to collaborate on, just because the opportunity is immense, and it's easier to be transparent where you have top tier funds investing in the deal alongside you. Other verticals, I will be more cautious on both sides.
Amazing. How can people read your post, follow you personally, follow the group?
Yeah, I would love for whoever is interested in reading more about fintech and what we do is to follow me on first and foremost, I think, on Medium, and then of course on social media where I post it as well. So yeah, Dovi Francis, that's my handle and feed on all of those channels.
Dovi, amazing, and I want to continue these conversations with you. I've been obsessed of getting you into this summit, and I'm so happy that we found time. And also for the next one, we're going to continue next year with the FinTech Nations, and you're so important in this space. And now I just heard about your personal vision. What do you want to do when you grow up in the FinTech world? And that's inspiring.
No, thank you, and thanks for having me. Obviously, there is this thing in psychology, we call it escalation of commitment. You do something, and then you're vested in it, right? So I've been doing this for almost a decade. I'm pretty vested in it, and I'm madly in love with what I'm doing for a living, and I just hope I can keep on doing it. Yeah.
Amazing. Okay, so thank you very much, and stay here in the summit. I'm sure people will want to reach, and of course LinkedIn and other social networks always works with you. Thank you very much.
Thanks so much, Neil.
Bye-bye.